here, Chris 3 Seconds Guys, Forex.com. So we have another video here for you. One of the things I want to talk about is something called bear and bull traps. This is a common thing that happens in the markets. Institutionals oftentimes will trap traders into positions that they'll find out very quickly they don't want to be in. These are called bear and bull traps. And the real key is, how do we spot them? I've been talking about for a while about channels, and actually channels are a great way to spot them. They usually will indicate, they can oftentimes, a channel will have a breakout, and if it runs for 4, 5, 6 candles, then then that channel is definitely broken out. It's been broken. But oftentimes a channel can be broken, but then price action can come back into it, which means it's a failure of a breakout. And that's usually a trapping environment. We're going to go over a couple examples here. So one recent channel we'll talk about was a very nice one here on the dollar index. And so we have this nice little channel here, and what's interesting is you have a lot of wicks off the edges of the channel, so the market is definitely responding to this. But then take a look what happens as we start to break out of it. We break out, we retest it. It looks like a good trade, and for a little bit it is, but then all of a sudden the thing fails right back into it. A traditional breakout will break out and keep going for several candles, but this thing broke out and it hesitated. It never was able to make any substantial ground. In fact, it just kept piercing and punching off of these lines here. And so then the thing fails, and we know it's a failure because of two reasons. A, it went back into the channel. But the other thing about it is that look at the two largest candles here. The two largest candles were selling candles. They weren't breakout candles. If the institutions were really into this breakout and they were really supportive of it and really committed to it, we would see much larger candles to the upside. We wouldn't see price action getting back into the channel. They would take the retest off of the channel as a buying opportunity to get it cheaper and then send it back up. But they didn't. They let the thing break back down into the channel. And so this is often a bear or bull trap. This is a bull trap, basically. So what it is that there's a price action formation that everybody can pretty much see. But then what happens is that price breaks out and it doesn't respond the way it should. It doesn't continue. It kind of stalls. And what happens is that on the breakout of this channel, I mean, a lot of people watching this. We had 3 touches on the top, 3 on the bottom. There are definitely a lot of people trading this breakout, and it broke out and it didn't go anywhere. And so now they're long. They're, traders catching this on the breakout, they're long around 77.95, 7800, and the market only goes up a few points and then it slams back down back into the channel. What had happened was the institutional traders realized, hey, this is not going to break out, and they trapped the traders in there, basically. So all these traders that are now long are just waiting and dying for some sort of retracement so that they can get out for a minimal loss. But they're trapped. They're long, and they don't want to be long right now. So that is what people are talking about when they talk about a bear trap or a bull trap, is that the institutions create some sort of price fluctuation, and they're not committed to the breakout. They know it. They're very well aware of it. Traders get in. Retail traders get in. The market just doesn't produce the move that it should be. It reverses back into that price structure, and now there's a bunch of people trapped in it. And so it just allows them to to take advantage of the people that are trapped long, and so this is a good sign. Is that the sign is that it doesn't produce any real meaningful gains. It just stalls, and then price breaks back into the formation. So that is usually when you're in a trap, and it's one of those things where once it breaks back into the formation, it's time to get out. This is the time. If you were expecting a massive breakout, this is the time to be getting out. Not here waiting for a retracement. So this is a defensive tactic. There's another good example of this was on the pound US dollar. We had this kind of ceiling here, a little bit of a floor. Price is producing higher lows. Looks like a real breakout. And it produces, 3 days of higher highs here. But then the market slams back into it. And instead of just continuing on, it just slams right back into it. And what does it do? Breaks in back into the price action channel, retests the top, and then finds its way to the other side of the channel. So when you see a price structure that's been consistent, and then you see a breakout, you know it's a failure when price re-enters that structure very quickly. And so that's what you want to be on the hunt for as well. So these are just some price action tactics, methods, strategies that we teach in the Pro Forex course. Things you want to avoid, things you do want to trade, how to know, detect when it's a fake out or not. And so we are also, just to announce, we have just launched 2 new online courses, our Advanced Price Action course and our Advanced Ichimoku Cloud Trading course. There's no Advanced Ichimoku Cloud Trading course on the planet out there today. This is the only one of its kind. And this Advanced Price Action course, we did over 10 years of quantitative proprietary data on all kinds of price action formations, things that you've never even heard of. I guarantee there's certain formations there you've never heard of. So if you want to find out more about it, check us out. Check out the courses at secondskiesforex.com. I'll be sending out an announcement. If you sign up for my newsletter, I'll be sending out an announcement on how to get a discount on it. I'll be offering a discount to the first 20 people, and then after that, I'll be locking the discount out. So it's going to be a first-come, first-served basis. So again, check us out at secondskiesforex.com. Read about the 2 courses. And until then, I want to bid you all adieu. Good luck trading, everyone.